please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
For the markets hovering around that 10,800 mark, you would say for the full week, the Nifty is likely to go home with gains of close to about 0.7%, while the mid-caps are likely to end the week with a gain of about 0.3% as things stand. But let's move on. Days after the PMLA, a court in Mumbai sent a notice to Vijay Mallya to be present in court or to be declared a fugitive offender. The Enforcement Directorate will move the court soon under the new act against Nirav Modi and Mehul Choksi. Utkarsh Chaturvedi joins us for more. Utkarsh, when is the ED likely to move court, and will this lead to ED confiscating their assets as well?
Exactly. So this will be next week. That's what we are picking up from our sources in the Enforcement Directorate, that ED will move court against Mehul Choksi and Nirav Modi. Both. What was stopping ED for so long to really go to the court was that the charge sheet of Mehul Choksi was not filed, and because the cognizance of the charge sheet was not taken, so it is this week that the cognizance of Mehul Choksi's charge sheet has been taken, and now ED will go ahead and also present a list of assets currently attached by the agency in order to confiscate all of them. The value of them is somewhere around 5,000 crore rupees. 1,500 crores is what the gems and jewelries are, and rest are properties as well as cars. Also, a lot of expensive paintings and watches which are being attached by the Enforcement Directorate.
Well, Utkarsh, the amount that the ED is looking to confiscate is now around, what, 5,000 crore rupees? Isn't this a tad bit lower than what they declared it could recover earlier? What has changed?
Yes, exactly. And Nigel, as you were saying, the amount which was earlier declared by Enforcement Directorate was around 8,000 crores in the initial stage itself. Now, what has happened is that the value of the gems and jewelry, when an independent valuator came into power and valuated all of those gems and jewelry, dropped drastically. In fact, if you look at the gems and jewelry attached by Nirav Modi, it is almost down to around 20% of what the valuation was. And this is the reason why the whole value of gems and jewelry has come around 1,500 crore rupees. So the whole amount of fraud is 12,700 crore rupees, but the attachment at this point of time stands only around 5,000 crore rupees, majorly because one, a low value of diamonds was used by Nirav Modi and Mehul Choksi as claimed by ED in the second charge sheet. Also, that the brand value of those diamonds when they were in the showrooms were much higher than when they went to the open market to be sold and evaluated.
Welcome back, and we of course are still assessing the damage that the industrial commodities will see, especially after the first tranche of the trade tariff kicks in this day. US has done it and China has retaliated with the same amount of $34 billion worth of trade tariffs on US now. And in this crossfire, we clearly have seen one sector continue to decline, and that clearly has been metals. Has been battered for last 2 months now since this whole conversation began, and we have seen prices continue to decline today in Shanghai and on LME as well. If you look at the prices today, well, the copper prices are trading at a one-year lows. We have seen nearly 5% of a decline come in for this week, and this week actually is the worst one since the year 2015 in November. It's a similar scenario when you look at the zinc prices also. We are down by 6% in this week alone. It's a worst weekly decline in last 3 or 4 years, and the zinc prices essentially are down by 22% in 2018. Now, that pretty much is the case for all the metal prices. If you look at the nickel prices or lead prices, they are trading at around 2-month lows. You have tin trading at the 6-month lows. Iron ore prices, the spot market declined by 2% today, and that one is trading at the lowest since the month of March as well. So nothing that has been untouched, especially for the industrial commodities, because remember, China consumes nearly 50% of copper, and that pretty much is how that they do with the other metals. So with what's happening in China, this is one sector which is definitely going to be impacted. And the others, of course, are in the agri space. If you look at the soybean and the soy meal prices, those are down by a couple of percentage points in the international access markets as well. So commodities clearly taking a hit as we assess the kind of damage these two unparalleled global economies really seem to be headed with. Himanshu Gupta of Karvi now joins us to talk strategies there. Himanshu, metals first, what are you sensing? What would your weekend strategy be in this sector?
Good afternoon, and thank you very much, Manisha. Well, clearly, this all trade war woes has actually hit metals the most, and we have already seen nearly 20% cuts for metals like zinc and copper. So obviously these kind of import duties, increase in import tariffs is likely to reduce demand for a nation which consumes or produces the most of the metals. So this is a fear that has actually told on the demand worries. At the same time, the supplies are also increasing, and which is leading to the narrowing of the deficits. So this all is actually leading to take a hit on the prices. So as far as the trading strategy is concerned, of course, we would recommend to stay on the short side. But one thing we would like to suggest in here and keep it in mind is that this is not something new. We have already seen an extent nearly 15 to 20% from the month of April, and today is the date when it's actually been implemented. So of course, the trade remains on the short side, but we would be recommending at the same time to keep on trailing the stop loss. Because if anything positive starts to come from here, we can see an equally sharp amount of short covering also. So this is how we would be looking to go ahead with the weekend strategy.
Himanshu, what's the sense on the crude oil prices? Because this is one part of it, and then the US tweets to OPEC is yet another. Iran warning on the Strait Hormuz is the third part of it. So there's just too much that really seems to be impacting crude also.
Yeah, absolutely. See, firstly, we will have to check that this consolidation comes after a rally of nearly 15% after the OPEC decides to increase the production. So the consolidation is coming well. At one point, the US is putting pressure on the Saudi Arabia to keep check on the prices. At the same time, there are trade war fears that the China might impose import duty on the US crude oil that's being imported from the US. So all in all, prices and at the top of that, we have already seen the inventories also moving up for this week. So this has actually led to a sort of consolidation in the markets. But looking at the global, the broader demand and supply scenario, if at all this Iran sanctions come into play, the markets are going to witness a withdrawal of nearly 2 million barrels per day, which is actually which is likely to put pressure on the supply side and keep the prices supported. So coming to the prices, I think $72, $71.50 remains a very strong support on the prices, and this consolidation is actually further likely to break up higher after a brief pause. So as far as the trading strategy is concerned, we would be looking to go long on the declines toward 49.90 on the MCX for the targets of 5,060, and a stop loss below 4,960 would be recommended.
Okay, all right. Thanks so much for that, Manisha, as well as Himanshu. But on that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next. Welcome back. Then the markets have given up close to around 25 points from the highs of the day. We have few stocks that are seeing some selling pressure. Titan, pull up the intraday chart out there. That stock has seen a bit of a dip. You have Z Entertainment as well. That's seen a bit of a dip from the high point. And a couple of other names, something like a Sun Pharma has come in for some profit booking. So keep an eye on that front. Remember, the breadth of the market is still in favor of the number of stocks that are advancing. So that's pretty good news. But otherwise, there is some profit booking from the day's top. But let's get to our next management. We have Shipping Corp of India. That's the stock in focus after Minister for Shipping, Mr. Nitin Gadkari, said that SCI is likely to get around 500 crore rupees to buy ships. To discuss this and more, we have Mr. Anup Kumar Sharma, the Chairman and Managing Director of the company, who joins us on the phone line. Hi, Mr. Sharma. Thanks so much, sir, for joining in. Well, first things first, have you heard about this 500 crore rupees that Mr. Nitin Gadkari is talking about?
Yeah, good afternoon to you and your viewers. Yes, it was announced by our Honorable Minister of Shipping last evening during a press conference. And as a national flag carrier, we are grateful to the Government of India for giving us this opportunity to contribute in the growth of coastal tourism in India. So we have heard about it.
All right. So how soon will you expect to get this money, sir?
We are awaiting the final details in this regard, and they have announced it. Once the final details comes,
in the next 1 month, sir, next quarter, within this year?
Oh, it's definitely going to be within this quarter.
Okay, within this quarter.
Super.
Will this be in the form of a loan? What do you have to give the government in return?
Well, as I explained, that we are waiting for the final details as to how will they give it to us, and once we get this, then we'll be able to spell out as to how.
But what is your own sense? Is it going to be just a gift of 500 crores to you?
No, it's not going to be a gift of 500 crores to us, but definitely they're going to fund us to acquire or lease out the tonnage for RoPax ferries and things like that.
They will expect some interest from you if it's a lease.
Well, as I said, I would not like to comment on this now because we'll have to see the finer details, what it is, what it happens.
All right. So with this 500 crores, sir, what do you do? And do you require more money?
Well, with this 500 crores, I'll be able to either buy ships, also lease out vessels on BBCD basis, and it'll depend on where these RoPax ferries and ferries will be required.
Okay.
So it'll depend on that. The finer, more details will happen once we have the full details.
You require more money, sir?
Well, as of now, it cannot be said because we are not aware as to how many ships we'll need on this. So what is the government plan in this? Once that comes in, then we'll be able to give a fix on the numbers.
And the impact of higher crude prices on your business?
Well, as the higher crude prices are there, our bunker cost has gone up. So there is a bit of impact on our business. And what we are trying to do is strategize our bunker buying from the areas where the bunkers are cheaper.
How much have the bunker costs gone up by, and how will it impact the company's operating margins?
Well, bunker prices have gone up nearly by 30 to 40%. And it will impact a bit, not so much, maybe about 4 to 5%.
Okay, all right. Mr. Sharma, sir, in the past you told us you're expecting margins to go to around 25% for FY19. That's on the cards?
Yes, that's on the card. We're waiting for winter to set in. Once the winter sets in, then tanker freights will go likely to go up. Bulk market is already doing reasonably well. And after the monsoon, the offshore market will also pick up. So that's what we expect this year. We expect margin to be around that much.
25%?
Yeah, that's correct.
Final question, sir. The government is, as you said, Mr. Nitin Gadkari has announced you're going to get 500 crores. It'll be good for you. Any talk of any kind of divestment in the stake that the government holds in y'all? I think it's around 63, 65%.
Not at all. No, we've not heard of anything on this respect.
Super. All right.
All right, Mr. Sharma, we leave it at that. Thank you very much for joining in. So that's the word coming in from Shipping Corporation of India. But let's move on. Let's talk about the possible disruption in the fixed broadband space. Yesterday, Reliance Jio in its AGM announced that it will be entering into that fixed line broadband services called Jio Giga Fiber in India from the 15th of August. Stocks like Hathway Cable have already lost close to about 30% of their market value in the last 2 days, at a fresh 52-week low for that stock as well as Den Networks. To decode this space, we're now joined by Rohit Dukania, the Senior Vice President Research at IDFC Securities. He joins in to discuss that. Hi Rohit, afternoon, and thanks so much for coming by to the CNBC TV 18 studio. Walk us through the impact as you see it.
Yeah, sure. So I think firstly, we'll have to sort of decode and understand that this market is actually quite different. So if you see the wireless market, there the passive infra was already laid out by the tower cos. So Jio was, it was very simple for them to go ahead and sort of switch on, let's say, an entire city on day one. But here, in the physical infrastructure, you have to actually connect single building by building, locality by locality, essentially. So from that perspective, it is a slightly more time-consuming process. Having said that, our channel check suggests that they have laid enough sort of fiber, which is probably in the range of 100 to 500 meters away as far as, the last mile is concerned. So it shouldn't be a big challenge, essentially, as far as extending that is concerned. Today, if you see, the market is about 18 million homes, out of probably 280 million total households. So that's like a 6.5% kind of, penetration. And if you look at a market like China or US, there the number of fixed broadband homes divided by the number of pay TV homes is actually upwards of 100%. Right, where in India we're at 14%, 1/4, because the pay TV homes are about 150, 155. So I think there's tremendous potential as far as this market is concerned. It could easily go up to 30%. Even if it goes up to 30%, we are talking of 45 million homes, as a market over the next probably 3, 5, 7 odd years. And from there, Jio could probably take a sizable share, essentially. So from that perspective, I think, it's a great market to get into as far as Jio is concerned. So I think potentially over the next sort of 4 to 5 years, there could be 45 odd million. Over the next 5 to 7 years, probably 45 million.
Just, one follow-up question on that. You said their target is to hit 50 million homes.
Sure.
Currently, the market is just 18 million homes, which means that they want to expand the market as well as capture a sizable portion.
Sure.
how disruptive could the pricing be? Currently, what are the broadband rates and how low could it do for it to achieve these aggressive targets?
Sure. So, we all know Jio's pricing strategy. I mean, when they come ahead, they initially launch with some free period. So here also it could be 3 to 6 months of sort of free period as far as that's concerned, So from that perspective, clearly the pricing will be very aggressive once they launch. But as I said, it's not a pan-India or a pan sort of South India kind of a launch. It would be on a locality by locality basis, city by city basis. So, in those areas where, let's say, Jio has a common network with some existing sort of player, let's say it could be an Airtel or a Hathway, there is bound to be increase in competitive activity, because the existing incumbent player will probably have to match the pricing of Jio. Now, obviously, it's very difficult to match free pricing even if it's for 3 or 6 months. But, our sense is that probably from an entry point of view, pricing could be in the range of $500. This is just our expectation as far as the core broadband piece is concerned. On top of that, Jio has already spoken about the various sort of value-added services, like television, you have sort of video conferencing, smart home solutions. I think all that will be sort of clubbed on top of this $500. So eventually, I mean, assuming a fair bit of a penetration, ARPUs for Jio could be upwards of $500, because of value-added stuff as well. If you look at the existing players, their ARPUs range anywhere between $480 to about $720. As far as the listed players are concerned. Another big player, which is ACT, his last year ARPUs were in the range of about $800. So yes, I mean, there could be some pressure, but please understand this pressure would be limited to those areas where they have a common network with Jio, which is very difficult to say right now. So honestly, if you ask me, I mean, the kind of pressure which the cable stocks have seen, over the past 2-3 days, I think it's slightly exaggerated because we are still unclear as to how aggressive, the next 1 to 2 years.
And which areas they launch
Which areas they launch, how much of common areas they will have essentially. There is no two ways. In common areas, it would be very aggressive, it would be very competitive. But I think, the market is being slightly, strict in terms of penalizing the stocks.
All right, let's talk about a couple of stocks then.
Sure.
Rohit, I think you have an outperform rating on the likes of Z Entertainment, Sun TV, as well as I think a Dish TV, if I'm not mistaken. So give us your rationale behind that. What would be your pick and what about the target prices?
Yeah, sure. So I think, firstly, in terms of the pipe laying to the last mile, I think, that's very good for all content owners in India. Because as you understand, video is the killer app, as far as data consumption is concerned. So if more and more subscribers come on the data bandwagon, you will obviously have more content consumption happen. So if you see the likes of Z, they are one of the largest content owners in India. Sun, largest movie library owners in India, right? So from that perspective, these guys will sort of benefit, over a medium-term perspective as far as the whole digital media spree is concerned. In terms of the traditional networks, as we speak today, they continue to do very well. In terms of Z, I think his market share is probably currently at one of their best ever, it has ever been, which essentially means that they will be able to outperform advertising industry ad growth, at least over the next 4 to 6 quarters, till the time market share continues to remain very resilient, essentially. So that's one reason why we have an outperformer on Z. On Sun also, we have an outperformer. Yes, off late there has been some pressure, largely because of market share losses in Tamil Nadu that has happened. But I think we should, give the management some benefit of doubt. I mean, they understand this market very well. I think you will see 2-3 large launches happen, content launches happen over the next sort of 1.5 months. Probably, if not increase, they should be able to arrest their market share fall, as far as that's concerned. So I think, over the next sort of quarter or so, they should stabilize the ship as far as Tamil Nadu market share is concerned. And because of the drastic improvement in IPL profitability, because of the digitization that's going on in Tamil Nadu, especially with Arasu also digitizing, I think earnings CAGR over the next sort of 2 years in Sun could be in the range of 18 to 20%. And the stock probably today is trading at, 20 times or 21 times FY20.
So content players will do well.
Absolutely.
Sun and ZTV.
Sure.
Very quickly, why is Dish TV in that? How is Dish TV not affected? That's a cable player as well, right?
Absolutely. Yeah, so it's a direct-to-home player. So, great question, obviously, as to why Dish will not be impacted. So, yes, Jio has plans for television as well. Absolutely, no two ways about it. But if you look at the construct of, Dish TV, bulk of their, almost 2/3 of their sort of revenues comes from sort of the non-urban areas, you know, and FTTH as a technology, any sort of fixed technology works very well in densely populated areas, and hence we believe that over this entire, you know, geo sort of launch over the next sort of 3 to 5 years will be concentrated, you know, in the sort of top urban markets, and hence we believe that the impact on a player like Dish, which has a higher salience towards non-urban markets, probably could be the least, and that's the reason why we have an outperformer, more so because of the current synergy benefits that they're expected to derive from the merger with Videocon, essentially.
Okay, all right. Thanks so much, Rohit, for coming down and for giving us your views. When, in fact, we spoke to Mr. Sharma, the CEO of Den Networks, on the impact of new technology on the company. Let's hear out what he had to tell us.
I feel it is good for the sector. This shows the business potential in the sector that exists. So I visualize a lot of attention in the sector, and that will make us also do the business properly. That will bring in a lot of technologies, developments in the sector. That will also mean robust business model need to be adopted by all the fellow cable players like us. The tariffs have been continuously falling out of these telcos' upcoming features and news that they will be venturing into. The model that we are adopting in 100 cities is a low capex-based model, and we are confident of delivering 30% EBITDA as far as those 100 cities is concerned, because of the different technology and modalities being worked out in the business plan. As far as 19, the prospects are quite bright, and you will see us turning black by the end of 19, definitely, in broadband as well.
All right, that's the word on Den Networks. Get into a break. Then on the other side, Ashwini Gujral and Rahul Mohinder will join in with their trading strategy. Stay tuned.